Hey everyone, in this video I'm going to reveal my top dividend stock to buy now in March. I'm also going to update how my top dividend stock pick has been doing throughout 2024. I've been giving investors my top dividend stock pick every month this year, so I'm going to show you how it's performed so far so that you can see whether or not I'm someone worth listening to in recommending a top dividend stock. So without further ado, let's jump in. Let's take a look at what this dividend stock is. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, my top dividend stock to buy in March is Visa, and it's been Visa for all of 2024 so far. Visa offering passive income investors a dividend yield of 0.68%. But beyond just the dividend yield, the total return for Visa looks promising. The company has a dominant market share in an industry that's growing in a fiercely competitive financial markets industry. The two main participants in that industry are not competing on price. Visa and MasterCard, they're not fighting against each other, lowering prices, making it less profitable for them to operate. That's a really attractive market characteristic I like to look at. So far in 2024, I mentioned I would share with you the return. Year to date, Visa has delivered 9.26 total return, 9.26% total return, way ahead of the S&P dividend ETF of just 0.13% return. So investing with my top dividend stock will have driven significant outperformance so far year to date in 2024. But like I've been saying in these videos that I do, don't expect this kind of outperformance to continue for the rest of the year. This is a massive outperformance. It's rare, it's unprecedented. I expect this gap to narrow for the rest of the year as the S&P dividend ETF, I think, will improve on its performance. And Visa may not earn another 9.26% for the year or somewhere around that level. So I still like Visa stock. It's my favorite dividend stock to buy, but I don't expect to outperform the S&P dividend ETF by this magnitude for the rest of the year. Let me share a little bit more about why I like Visa so much. First of all, the company's done a phenomenal job growing revenue, right? You might think of Visa as a boring old company, but it's done a good job growing revenue. 12 billion in revenue in 2015 in a trailing 12-month period. That's almost tripled in a decade to 33.35 billion. There are more than 4 billion Visa cards in people's wallets today. More than 4 billion. Every time somebody uses a Visa card for a transaction, Visa takes a percentage of that transaction for itself, plus a small fee. So inflation is Visa's friend, because if people are spending 3% more this year versus last year for the same basket of goods, that's just more revenue for Visa to generate revenue from. That's an increasing nominal revenue. That's good for Visa. So if you're an investor that's at risk of inflation, now I know investors that are on a fixed income, inflation is one of your bigger risks because your income is fixed. You're getting a set amount of income for the rest of your life, or whatever amount of period that you've earned that fixed income for. Let's say you're on an annuity or you're getting retirement income and it's fixed, right? So if the price level increases and you're still getting the same amount of money, then you're losing purchasing power. So one of the risks you need to fight is inflation risk. And Visa offers you some protection against inflation, because if inflation increases, that's going to be helpful to Visa, and you get some degree of inflation protection by adding Visa stock to your portfolios. More importantly, the number one reason why I like Visa stock, well, I shouldn't say the number one reason, but this is the culmination of all of the factors that makes Visa stock attractive, right? All of the competitive advantages, the industry dynamics where itself and MasterCard are not fiercely competing against each other on price, has led to this incredibly strong 67.34% operating profit margin. And that's been increasing, right? From 2015, it was around 63%, and it's now up to 67%, signaling that Visa can protect this operating profit margin and, in fact, increase this operating profit margin. I have yet to find a company that I follow that's generating a better operating profit margin than Visa. It's the best. And if you follow my channel, you know I research a lot of companies. Visa is the best in terms of operating profit margin of all the companies that I follow. I really, really like that. That's very attractive for me as an investor because it signals the company's going to generate strong profits. I like companies that generate strong profits. And that's resulted in growing earnings per share up to $8.55. That's more than 4x where it was in 2015. This has been a combination of Visa's growing profitability and the asset-light business model, allowing Visa to buy back shares and reduce the share count on top of increasing profitability, and that's increased earnings per share significantly. If I look forward and I'm looking at Visa's prospects over the next 3 years, in 2024 fiscal year, which ends in September for Visa, it's expected to earn 9.8% revenue growth. 2025, 10.4% revenue growth, and 2026, 11% revenue growth. One of the other things I find very attractive in investments is second derivative growth. Not only is the rate of growth solid at double digits, but the rate of growth is increasing from 9.8 to 10.4 to 11. Second derivative growth. For earnings per share, you're not seeing second derivative growth, but you are seeing solid earnings per share growth of 13.1% in 2024, 12.5% in 2025, and another 14% in 2026. Solid double-digit growth in earnings per share for Visa on a company that you might be surprised that's growing double digits, right? You may have thought of Visa as a decades-old boring company with little to no growth, and you'd be surprised to see that it's growing by double digits, and you saw the phenomenal growth in revenue, in profitability, in earnings per share, and so on. And then finally, the stock is not prohibitively expensive. In fact, it's trading at a fair valuation. It's trading at a forward price to earnings of 25.45, which is about the average it's traded for going back 3 years according to this metric, right? It's been lower sometime, and it's been higher sometime. At 25, it's right about its fair value. And I don't mind paying a fair price for an excellent, excellent business. And Visa is a top-notch business. It's in the Hall of Fame in my category of business ranking. Visa is. So I don't mind paying a fair price. In fact, I'd love to pay a fair price. I in fact, own Visa stock. I own MasterCard as well. I just like that business so much, and I own both of them, but I like Visa much better than MasterCard, and so I'm still recommending Visa as my top dividend stock to buy for 2024 in March. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.